The whole reason on the market pulling down lately and AMC being caught up in it, it's Omicron and the inflation becoming a more bigger problem than it is. All right. And I mentioned to you in one of my last videos that don't be fooled by this price action on AMC. All right, because there is a bigger picture that we need to look at. And I want to share with you in this video that it is actually worse than we thought. It is actually worse than the hedges wanted us to know and to be aware of, because this Omicron thing, this inflation thing is really being a thorn in their foot. It's really being a real pain in the butt. All right. And that's why when I said that this is going to be one of the last attempts, desperate attempts to try to give the impression and shake the tree, all right, before potentially the whole rip, which I don't know exactly when that may happen, because when you look at this news coming from, Reuters, Omicron fuel volatility deals hedge funds worst monthly return since March 2020. The worst monthly returns since 2020, since the pandemic. Keep in mind that this whole AMC thing started at the beginning of 2020 because, hey, nobody was getting out, all right? So let's see what this says. Hedge funds are down an estimated 1.6% to 2% in November. This is only the month of November, their worst monthly performance since March 2020. Hey, we're talking about hedge funds here, all right? These are supposed to be the top of the cream of the investment money management on the street in the world, all right? So 2% down for them, it's really a big deal, especially when it comes to this close at the end of the year, all right? The potential losses are set back in what has been so far a steady year for performance. All right, the average hedge fund is up 11% for the first 10 months of 2021. Data from hedge fund research showed that compares to 11.8% last year and 10.5% in 2019. So they're still doing pretty good compared to the previous years. Now, when you look further down, it tells you that, hey, when you take, for example, what happened with Moderna. The shares of Moderna, for example, which Sears said some of hedge funds had bet against, jumped 30% between November 18 and November 30 since this whole, Black Friday exactly, all right? Prior to November 18, short interest in Moderna amounted to 14.4 million shares, and that's a 4.1% of the float according to S3 Partners. Lots of these hedge funds are using computer-driven trend. All right, they use a lot of algorithm, they use a lot of technology to make sure they try to find performance, they try to find gains where they think, those gains are. Now, some of these hedge funds are likely pulling back on risk this month in an effort to preserve the returns they had so far this year. And that's because they have clients. They don't have, regular clients like you and I or the average Joe on the street. They have wealthy clients, like the top-notch billionaires and multimillionaires, and those are the clients that they have. So they need to continue to prove and sustain that, hey, this is the reason why you should keep your money invested with us, because these clients, they are very picky. Otherwise, they would jump out the window, jump out the ship and go and find somebody else or put that money into something else. All right. That's why we are now 3 weeks before the end of the year. That's very important. So it's unlikely we'll see funds trying to be heroes and trying to reinstate major play to capture a rebound. Simply put, 3 weeks from the end of the year, they don't want to mess up all the, double-digit returns they have so far, especially as the market is pulling back. Now, 2022 is going to be a whole different year if you look about, if you think about inflation, if you think about the new risk and this Omicron thing, which I believe is personally way overdone. But the point is, they don't want to mess up the money they gained so far and the solid kind of impression they had to the client. So in order to preserve that, I bet that some of the short sellers, especially, or some of the hedge funds taking big bets, on the wrong side of where the market is supposed to go, are going to pull back a little bit. And that is a good news for AMC, because when you think about the people or the companies who are really, the biggest hedge funds here on the short selling side, they are not totally different from this situation. It's also true for them, all right, because this whole research is based on all hedge funds across the board, all right? So when I told you that this price action was totally fake, it's because, hey, they know that the end of year is coming, all right? They know that with inflation coming up, interest rates coming up, and the Fed doing something, that Powell announced a couple of months ago, money's going to be tight. So they better do and try to shake off, and scatter for any significant gains before the end of the year. Otherwise, it's going to be tricky. All right. But the thing is, AMC is not a regular other stock in the market. AMC is a little bit different because you have millions and millions of shareholders, investors, the apes, holding and keep buying more and more. All right. So I wouldn't be surprised if we are seeing some major recovery in the coming days or even the coming weeks. All right. But the thing is, nobody knows exactly when the big jump, when the big rip is going to come, which we are all looking forward. But I wouldn't, really be worried about this thing, even if it drops a little bit again Monday or Tuesday. That's just my opinion.